This is the Infinity Summit Group. Truth, passion, success.
Hello, everybody, and welcome to another Infinity Summit Group podcast. Today is August 23rd, 2021, and I'm Noah.
Xavier.
Logan.
Jesse.
And welcome back, everybody. Today, we're going to be talking about a book that's near and dear to my heart and little understood by me. It's called Tax-Free Wealth by Tom Wheelwright. Pretty much just a banger of a book, honestly. There's a lot of reviews and stuff saying it doesn't give you much detailed information, and I think that's because it was just covering so many different topics.
Taxes are also so personalized.
Yeah,
everybody's situation's so different. If you started giving like advice, like legit numbers advice, it'd get a little dicey, I think.
But overall, though, you know, when he talks about the LLCs and how you can use them to, you know,
it was a good book.
He gave
get
a lot
tax deductions.
a way more thorough explanation than when we did it and just looked the stuff up on the internet. It wasn't nearly as. Didn't get nearly as much from it.
when he was talking about each of the corporations, LLCs, all that. That's what you're saying, kind of thing.
Mhm.
Yeah. So I'd highly recommend reading that book. And again, it's Tax-Free Wealth by Tom Wheelwright. It's in the Rich Dad Advisor series, and he just briefly glosses over a bunch of tax topics. Always tells you to go back to your CPA and make sure your CPA knows what they're doing as well, which is great advice. Again, anything we say tonight is not advice in any way, shape, or form. This is just kind of what we've interpreted as and how we're going to proceed forward with all the tax stuff.
A CPA is basically just your tax guy, yeah.
Yeah.
For people that don't know.
Yeah, sorry about that.
What does CPA stand for?
I'm going to check that out.
Stands for Certified Public Accountant.
Yes.
Oh, nice.
There we go.
So that's your tax guy.
Say that, and what was the other one? Some attorney or
You want
asset attorney or something? Asset protection attorney?
It's the attorney for to write up your contracts and
Yeah, he says to always
Yeah.
consult those two.
different business types.
Trusts, things like that.
Mhm.
Yes. And he made it sound like trusts, whether you controlled them or not, were kind of entities that went outside of the law.
Yeah.
Not outside of the law, but like it separated you from your trust.
Yeah, like it's not yours.
Yeah.
It sounded like you were like the third party.
Yeah.
That's what he was kind of saying.
Which is how I thought they worked, but from what we were reading, it was saying that's not the way it works.
That is the opposite. I thought a trust was supposed to be yours and you decide everything about it.
Which is what he was saying, but also he was saying it's a shelter from any,
Taxes and
not necessarily
lawsuits?
taxes. It will be a shelter for your kids from taxes because
Right.
it'll pass down to them. But it's a shelter from lawsuits, things like that. So we'll just have to see when we go set up trusts for our own children and grandchildren. We'll let you guys know on that. We're still a minute out. I imagine once we get more than one property a piece, then we'll start setting up trusts and wills and things like
or
that.
start a business.
Yeah.
If we
Well,
legit get after that.
Each house is going to be its own LLC, or each city of housing is going to be its own LLC, and then those LLCs are going to go under a parent company, and that parent company is going to be in a trust.
Okay.
Potentially, I think that's kind of how it's going to work because you're going to want, if you have houses in multiple states or apartment complexes, multiple states, whatever, then you're going to want each of those to have an LLC. Or if they're in the same city, like I said, they can be in LLCs grouped together with their own insurances and stuff. And then you have a parent company that owns all of those LLCs. And then all of that is going to go inside a trust so that it can go to your kids and grandkids. Pretty sure that's how it works. I'd have to double check and ask some people, but yeah. It'll be interesting. Anyway.
Sounds complicated.
Yeah, it will be, and that's
you
why
get
there's
tax people.
lawyers. Yeah.
Yeah, that's why you need a CPA?
CPA,
yeah.
Yes, sir.
Qualified tax consultant.
Yes. So the main theme of this book is that you want to figure out how you can best reduce your taxes and reduce them for the rest of your life. Because he was saying, what Tom Wheelwright was saying was that a lot of CPAs try to reduce taxes.
Right now.
Yeah, right now, and it's like, okay, you're going to be paying those in the future. What his firm does is reduce them forever. There's a lot of, like his firm, because they're so well known now, has a lot of different fees and stuff. I've heard of people that looked into it and just their consultation was like 10 grand.
Holy crap.
Yeah.
Well, if they save you that much money.
Yeah, it depends.
You
If
have
you've
the
got
money to
100
save.
grand in taxes and you pay 10 grand to save 70, it's like, okay, whatever. Or like the one example he said, the one lady paid him 20 grand and he saved her 70 grand in taxes. So it's a pretty good return on investment.
How much does like a regular CPA cost?
Not too bad. I was talking to Oakley over the weekend because he just barely started his own business. And
Is he a CPA?
no, he had got a CPA to handle that stuff.
Oh.
And they were doing maybe like $100 and then an extra $50 every month, and they'll handle all your bookkeeping and payroll and stuff.
Are they good at it, though?
Yeah.
I don't know, but I'm saying
That's
you
the
can
trick.
get one for cheap.
Well, that's
I mean, good enough that it works for them.
I guess you'd probably have to switch out CPAs as you go on, because you wouldn't want to be paying for, something super expensive at the very beginning when you don't have the money
Yeah,
for
you
it.
just pay
Yeah.
something like that. What's the business in, if you don't mind me asking?
Installing cabinets.
Oh, okay.
Started his own
Awesome.
thing doing that.
Nice. That's sweet. Yeah, I imagine you start off with a little cheaper one, and then as you grow, you just gotta pay the accountant accordingly.
Yeah.
What you don't want to do. What I love about the Robert Kiyosaki, like the whole thing that way, was when he was talking about. And this isn't in this book, but it was in Fake, I think, where he was saying his real estate agents, he gives them a bigger cut versus the smaller cut,
Yeah.
to find him good stuff.
So
You
they
know?
try harder.
Well, yeah, if you're paying
Yeah.
someone more, obviously they're going to put in more
Yeah, because a
effort.
lot of people try to undercut him, be like, yeah, my fee's 5%, and people will be like, I'll give you 3%. He's like, nah, I'll give you 8%. Make sure it's good,
I like
And
that.
so if he does that, it's like a one-time thing, and then he just
Yeah, it only
goes from
makes
there.
sense considering
Or his-
they're the people that find you your money.
Yeah, or his property managers or anything like that. You just keep going. Yeah.
Especially like tax guys. I could imagine it would be so easy if
Dude,
they
if-
was just feeling a little lazy because you tried to undercut them for your just everything to get fucked up.
Oh yeah, you don't want to.
You'd want to pay them more just so.
Yeah. Anyone in
Don't
charge
mess
of your
up,
books,
please.
don't underpay. And that's advice.
And you pay for the quality, right?
Oh, for sure.
Yeah, definitely. So, some of the things he was talking about that you can write off taxes inside is one of them is an LLC, which we talked about, and that is like a tax shelter kind of thing, but it's not. It's not like a traditional tax shelter. So
It's not intended for that, right?
yeah, right. And
But it
any of
works for it.
these, if you start a company just for the intent of writing off taxes, you cannot justify that, and they will audit you. And
They
Yeah.
will come and find you.
correct. So with anything, with any of these tax write-offs, if the tax write-off is the sole purpose of having that investment or whatever, then you can potentially get audited, and they will discount all of that. Because if you create an LLC around your own, we'll say quote unquote business, and then you're writing off all your meals, all your hotel, all your gas, all this crazy stuff,
Does it say
then
it has to be normal in the field or standard for the field that you can
yeah,
write
it
off?
has to be standard and ordinary, something like
Yeah.
that. Yeah.
Mhm.
Like you couldn't go buy some giant statue and call it office
Correct.
decorations.
Correct. Yeah. So whatever your field is in, if you're doing office supplies and you want to buy a new printer, it's like, okay, my office does this much. Here's this printer. You're not going to go buy a $30,000 printer just starting out to get that tax write-off. You probably buy a $5,000 to $10,000 printer, which is going to be a hefty printer, by the way.
Yeah.
But anyway, just expenses that are ordinary. You go to lunch. If you're a salesman, you'll probably go to lunch every day or 3 times a week, something like that. And you can write off that much. But if you're, like he was saying, mechanic or something?
Mechanic or a dentist or something.
Or a dentist, you might go to lunch once a week or twice a week, So just make sure your expenses are ordinary. Any trips you plan, he's saying to write them off, you have to spend more than half of your time talking about business.
Which is like 4.5 hours, right? Because that
Yeah,
for
yeah,
the 8 hour.
4.5 hours a
Same.
day. And
Also,
I mean,
he said to
technically,
write notes and stuff too, and
Yes.
exact times you stopped talked about it, everything.
Really?
Yeah. He said the better documentation you have, the easier it's going to be. If you get audited, you're just going to be like, yeah, here's all this.
Yeah,
And
it
then
can
they'll be like,
quick and
oh,
easy.
okay. Yeah. So that was interesting with the vacations and stuff. He's just like, yeah, you can write it off, but you got to spend more than half of your time in an 8-hour day. So technically it'd be like 4 hours and 1 minute.
Would you
You
have
know?
to do weekends like that? Like if you were taking a vacation for a whole week, do you have to do a weekend, or is
I don't
it every
know.
single day?
I think they would
Wait,
count that as
probably.
a work day if you,
If
you
you're
wrote
getting
it down as a work
write-offs
day.
for it, yeah.
Probably.
I was wondering too. Like if you took a week vacation and you only spent half of it, do you write off half of it? Can you write off like 3 out of your 4 days or whatever you're talking about business, and the last
You
one's
write
purely
off
vacation?
everything.
Everything.
So if you spend more than half your days, so just do that every day, you can write off everything.
Yeah, but if you stopped, is what I'm saying.
He
Like
said-
you went there to do something and you did it, and then you're just staying there the rest of the week.
That'd be a CPA question.
It just seems like could you count the whole trip or just those couple of days?
I don't know.
I assume just the couple of days, but
Probably because how do they know?
Or yeah, do you count the flight there? Do you pay for all that with tax write-offs,
Yeah.
and then not the way back?
And it's not that it like directly writes off. It's basically going to go against your profits,
Yeah,
right? Your expenses versus profits. So you may or may not even have to worry about it. But yeah.
Yeah.
That would be a CPA question.
Yeah.
Not something I feel comfortable answering. Crap, I lost my train of thought.
Well, another thing
Thank
that's kind of cool is the government actually makes these tax incentives for you because it's something that they want you to do. Instead of, it's not finding a loophole. It's basically doing what the government wants you to do, and that'll keep, profits up and keep everything moving. And so that's why they offer these benefits and the tax breaks.
Yeah, it's there to help the economy. Like with the housing market or anything like that, they want you to buy into it and build that field so the more people will like join it, and then pretty much they're gonna make an assload more money
Yeah, that's
off of you.
That's why you get, tax breaks for hiring certain employees, hiring more employees, having more kids, buying or making a business, having a
Investing
business.
in oils and
Yeah,
what is it? Energies that are in the States or whatever.
Mm-hmm.
they want
Domestic energy.
they want things to keep going. So
Yep.
Again, as long as you have a reason to invest in these items other than as a tax write-off, then you'll probably be okay.
your whole goal should just be to do these things anyway, and then that's just a benefit.
Correct.
Yeah.
Correct. But the government does steer you with the tax code so that you are more willing to do these certain items, such as buy real estate, oil, all this jazz, versus going off willy-nilly doing your own thing. You know?
Yep.
They want certain things to grow, and so they make incentives for those. Yeah.
Wait. Okay. Here's a question.
Yes.
Does anybody know? Is it illegal to take all your money and hide it somewhere?
No, it's not.
Explain that.
Yeah.
If it's after-tax money, no.
Oh, okay.
So you've been taxed on your income. It's not illegal to go hide it.
Just throw it in a Swiss bank.
Yeah.
Yeah, an offshore vault.
But you're going to have fees there.
Oh yeah, true.
You'd have to have a lot of money to make that worth it.
Yeah.
I was just thinking of Wolf of Wall Street, but he didn't really do that legally.
Yeah, so there's ways to legally do it. You just got to find a lawyer that
It's good at it.
specifies in offshore banking.
Hmm.
Yeah. Because you don't want to mess with that shit.
No.
Lose everything and get fined out the nose. Ugh. No, thank you. So make sure you're doing business the majority of your trips. Make sure you are talking about, if you do go to lunch and write it off as business, make sure you do talk about the business during your lunch. And it has to be these lunches and things like that you can write off has to be like the purpose of the lunch was to increase business revenue.
Mm-hmm.
You can't just be like, yeah, business, and that's it. It's like, no, how can we improve this business?
What would that look like if we did it?
So
Like
we
with
would,
this be?
I've actually thought about creating an LLC because let me
makes you
tell
want
you,
to,
let me tell you what that would look like. So it would look like us going out to a dinner, Leatherby's, whatever, and talking about how we can improve the group, things we can change. Basically, as long as business is mentioned and we are going to that lunch in hopes of furthering the business, then that's writable. Offable.
Even if we brought guests or just like other people, we could write that off.
That's what I was thinking. If you brought a
networking.
guest, and
Yeah.
you could
Yeah,
ask about
that's
this.
active networking.
Yeah.
Done
I
and
wonder,
done.
what does a regular and
Sorry.
ordinary expense look like for a podcast? Like for us, maybe it would
Podcasts
be
aren't
once a
generally
week.
businesses, as far as I'm understanding. They're usually around promoting a business.
Right. I was just wondering, like for Joe Rogan example, and he takes everyone out to dinner or whatever, cooks some food. Does every day does he count? If he could
Oh,
write
yeah.
that off, yeah.
He's making.
But, like,
he
for us,
literally
'cause we
made
do-
his own niche. So
Yeah.
yes.
Well, that's what I'm saying. But like for us, we do it once a week. Would we do it once a week, or could we write it off every single day?
We could do it
Because
more.
regular and ordinary for the rest of the business would generally be every day.
I would talk to a CPA about that.
I figure once a week.
And
'cause-
err on the side of caution. Once a week probably wouldn't hurt, but it would hurt our pockets, and I don't want
Oh,
to do
absolutely.
that. So, yeah, I think we'd be fine. I think more like once a month would be awesome, and you could write it off easy. A lunch once a month or dinner once a month, easy. Or even outside of the group, if we meet ever outside of the group, even just two of the members or whatever, you can write those expenses off. As long as it was
About business. And
funded by the group. Yeah.
Right, it would have to be. Huh?
Yeah, it would have to be funded by our
End up getting
pool.
dicey.
We
Exactly.
gotta get a bank account and
Yeah, we'd have to
credit
do that.
cards for all
So
of us.
I thought about this because he was saying for an LLC, you can take all of the expenses for funding the business and write them off in the first year. What did I say? The first year you're founded or something like that?
Yeah, but it's like a yearly thing, right? It goes over a long period. You don't get to write it all off that year.
Yeah, you get to amortize it
Yeah.
out. Yeah.
Wait, so we could write off all this?
But it would be over a period of years.
Yeah.
okay.
Yeah, so
it
we would
wouldn't
get
add up
tax
very much.
deductions for our equipment, for some of our things. We won't get tax deductions for the assets we've purchased.
Like the
Actually,
silver.
no, because we wouldn't be a business until we're technically an LLC.
Yeah.
So we wouldn't technically be a business. So up to that point, once we became an LLC, any expenses in our first year that count as
Okay.
startup costs can be written off over a period of time.
It's like if we did it and spent hella money on advertising and stuff.
Exactly, which is what would happen.
Advertising and
We'd
a
if we
camera and
create
all
an
that jazz
LLC,
and-
we'd be purchasing a camera, we'd be purchasing shit tons of advertising, we'd be purchasing all sorts of crazy stuff to get our name out there.
Okay.
I wonder-
We could write all that off.
Yeah. But it would be over a number of years, 5% per year over the next 10 years or 20 years, whatever.
Okay.
What does the tax write-off look like? I know probably nothing we would know, but like, so if we get a write-off so much money, does every single person write that off?
No.
Or does just as
It's
the
just for
company
the
write it
group.
off?
You would
That's what I
file
thought.
taxes for the company.
That's what I think.
Yeah, it'd be separate.
So we'd have to get someone to do that for us.
Oh, absolutely.
You
Yeah.
couldn't go through, what is that, Truebill? Or, not Truebill. What's that tax?
TurboTax.
Yeah.
Yeah.
Yeah, you would want a CPA to do all
yeah,
of it.
but a
Yeah, I'm just
CPA is
kidding,
not going to be super
TurboTax.
expensive, especially if you've got
No.
good books and everything.
No, I
But-
think my dad was saying since he started one not too long ago, it was $150 to start it off, and then a $100 fee or something, or a $50 fee every year, and they'll do your taxes and everything with who he goes through.
That's not bad. That's cheap.
Is
as hell.
that for himself or for he
For-
started a business?
He started one with Dan, yeah.
Oh,
That's
cool.
not that bad. I thought it was going to be like $500 a year.
No, he said it was pretty darn cheap. I talked to him about it this morning.
That might be what it is for my dad, because he's got a couple more things that are going into it. A couple different things that are flowing through a business.
And my dad's pretty basic, so I don't.
Yeah, I don't know.
Like a lot going on there, but
I wonder if they just take a percentage of like whatever taxes, how much your taxes are, take a percentage of that or something. I don't know.
Yeah.
Anyway.
I'm sure you could talk
Probably.
to people and figure it out real easy.
Yeah, I can. Yeah. All right. So, talked about LLCs and we talked a little bit about real estate. Let's get back on real estate just for fun. Just as a side note, real estate grows in 4 different ways. I think we haven't mentioned these before, I don't think.
No.
Anyway, so real estate grows and gives you money in 4 separate ways, and it's very good for taxes because it gives you tax deductions, whatever your expenses are, and real estate depreciates over a number of years, quote unquote depreciates, because in real life it generally appreciates, but the government sees it as a depreciation of the property's condition, and so over a number of years, do you mind looking up how many years it is for residential real estate? So over a number of years, you can depreciate this asset and you receive that amount as a deduction for that year. So you have your appreciation for real estate. You have your tax deductions, which are depreciation. You can depreciate all your furniture inside, any machinery, things like that. You've got the cash flow from the tenant paying you if it's rental real estate. So you'll have your mortgage and everything that they're paying for, and then you have whatever profit above and beyond that that'll help you save up for other parts of the property. And then the tenant also pays down that mortgage, like I was saying. That's the 4th way you get paid. So you have appreciation, tax deductions, your cash flow, and then your mortgage that's being paid down for you with real estate.
Yes.
Did you happen to find that?
Says 27 years around.
That sounds right.
Yeah.
Okay. 27 years for residential real estate. So how long you can depreciate. So what is that, like 27? So it's like 4% per year.
Yeah.
Just under 5% per year.
I think so.
All right. That's not bad. Awesome. And then the like the furniture and machinery and stuff inside depreciates a lot faster. A lot of those are like 10 or 15 years. So you can get a lot more money back faster tax-wise that way. Okay.
There's also a good YouTube video that I'll post under this about specifically in real estate tax write-offs that you can do. It's called The 7 Best Tax Write-Offs When Investing in Real Estate. It's by Graham Stephan.
Oh, Graham Stephan, I like
him. Yeah, he's a beast. I'll link that below on our YouTube.
Sweet.
Heck yeah. All right. One of the topics that Tom Wheelwright went over in this book is the 4 types of your income earners. This is also known as the cash flow quadrant that Robert Kiyosaki came up with. Basically, you've got your 4 types of earners. You've got an employee, you've got a self-employed, got a business owner, and the investor. So that's you guys have probably heard it referenced as the E, S, B, and I quadrants. So the employee, they just go and work for a paycheck. That's it. They get taxed at the highest amount, as well as the self-employed, where they go work for a paycheck and that's it, except for they happen to own the business. So both of those guys are just income wage earners.
They're just the consumers.
Yeah, kind of, yes. But they just get taxed out the nose.
Mm-hmm.
So that's where you're gonna find your people who are being taxed 37%. I think is the highest tax bracket in America.
Not for long.
Holy shit.
Yeah, not for long. We'll have it higher soon.
Yeah.
Why?
Because Joe Biden's increasing it?
Yep.
To what?
They're also trying to increase
more?
the capital gains tax.
I don't know.
A while ago, they were trying to they were trying to make an unrealized capital gains tax.
Which means...
Meaning, like, if you have gains in your account, but you haven't sold your stocks or your real estate, you still got to pay on those gains.
What?
Which doesn't make any sense.
You got to pay on
That
money.
That didn't go anywhere, so just so you know.
Well, good.
Yeah. But I digress. So the business owner, wasn't this 500 employees or more? I think they were talking about.
I don't remember that part.
I do not. We didn't...
Big business owner. They
didn't go
touched
into it
on
in the book very much.
I think
In this
Robert
book.
Kiyosaki talked about it in Fake a little bit. Anyway, business owner is your B quadrant. This is generally like a corporation kind of thing, where they've got a board of directors. They've got quite a number of employees, things like that. And then you have your investor quadrant, which is just your average investor. They throw money at investments, real estate, gold, silver, oil,
Even other
There's
small
other-
businesses. To
other
get 'em
small
started
businesses.
off.
Exactly. You just invest in things and get your gains that way. So the business owner and investors pay the smallest amount of tax because not only are they doing what the government wants, but they are more learned when it comes to the tax codes, and learned as far as knowing which CPAs to go to. So that's why they end up paying less tax, and that's how you'll have these billionaires out there paying zero taxes when they're gaining millions and billions of dollars, but at the same time they're like, oh, sorry, I didn't have an income technically. I just gained 100,000 shares of my company, and it was a gift. You know, they're smart because they know they know people who know the tax codes, so they're not shorting anyone. They're not gypping anyone. They're just smarter than you.
Tax code is
Smarter
just,
than most, we'll say.
you keep on saying tax code and we haven't went over that at all. But it's just
Yeah.
federal documents of like what taxes are. So there's nothing special.
What taxes
to it.
are, what you got, what in what circumstances you got to pay, how to avoid paying them.
Yeah.
Most of the tax code is how to avoid paying taxes legally, and then a small portion of it is actually what taxes you have to pay.
Could you create an LLC around a business that was just revolved around you being an investor?
Yes.
I think that's what he talked about, right? With being a full-time investor,
Yeah, you just
or like in the stocks.
yeah. So he talked
trader,
about
that's
he
what he
talked
called
about just being a trader, but there was a lot of things that you had to meet for that. That was a lot.
Yeah.
And I'm sure there's a minimum amount you have to have and all this jazz. But just being an investor, yeah, you invest your money through the business and do it that way.
But what would the business be on? Because you have to have an LLC, like, mean something, right?
It's an investment company.
All right.
Am I not answering your
No,
question?
it makes sense. It's
Okay.
just like,
It doesn't make sense because it's intangible.
yeah.
Investment company is not like I sell iPhones. It's like I just throw money at shit and hope it grows.
Yeah.
But yes, I know people with investment businesses.
Okay.
Yeah. And so their daily lives, a lot of their commute, a lot of their gas to go to work for to fund this investment business is written off.
See, that would be the strat right there.
Correct.
Wait, so they can write off their gas to go to work because they're using that money to
I don't know how it works, but I'm pretty sure. Yeah.
That sounds shady.
That's why it's like hard for me to wrap my head around it.
No,
because it sounds illegal.
I
as
know.
hell.
I know.
Yeah, it does.
I know people who have told me like, nah, you just go to Wendover for a few days, call it a business trip, write it off. I'm like, what? I just go here and hit there. There's been some stuff. I'm like, I don't know that you should write that off, my dude.
Talk to
but
that tax
okay.
guy
Bad
for
idea.
real, for real.
Yeah, exactly. So maybe we could have a CPA on here. I don't
That
know.
would be
I don't
cool.
know who
be
would,
crazy.
but then we could just ask them all the tax questions. But it would have to be someone who is learned, you know, not these 30-day CPAs, accountants, you know. But
That'd be sweet.
That would be a good one to try out Discord on. Then they wouldn't have to have them over.
ooh, that's not a bad idea.
Yeah.
All right. So, anyways, yes, it is possible to do a lot of this stuff, and create a business around your investments. I've actually thought about creating an LLC so that my capital losses can offset my taxes. I haven't done it, but I'm looking into it.
Okay.
Yes. Because I could have silver and gold, I could have stocks and cryptos, I could have all this under it, and then any losses I get from those when I sell, write them off. Yeah. And then that would offset my income normally, possibly.
That'd be cool.
Yeah. I don't know if I can have it because I'm the owner. I don't know if I can have it, and I'm pretty sure I can't have it offset my personal income, but I think if my business made income, then I could have all my capital losses offset those capital gains and then just pay capital gains on those. Yeah.
We need a
Anyway,
tax
Confusing
person
stuff.
on here for
dude,
real,
taxes
for real.
are so damn cool. Like, I want to read more about them, but it's a lot. They're just way cool.
Seems like you'd have to go into one subject about taxes.
I've
and
hacked
just
the system.
Learn it
Yeah.
completely.
Pretty
first,
much.
and then move to the next thing.
Just
Yeah.
need to just go talk with the CPA.
Yeah.
Yeah.
Or that.
A couple hours. Have one that you know their phone number so you can
Anyone
want
want to become a CPA here?
Not really.
Hard
me too.
pass.
I
I'd
think you
rather
can
pay
get a
someone else to
CPA
do it.
license without having to do a ton of work.
Really?
Yeah, but
I don't think you need to. I would way
Just
rather
think.
become a licensed real estate agent than a CPA
Yeah, by far.
because that could be very beneficial. And those you can get done in like 30 days. Become a real estate agent.
Really?
Dude, it's so fast. Yeah.
The
so
hell?
probably something we're all gonna want to do at some point. Just if we're gonna be
Yeah.
buying our own stuff, might as well
Well,
get our license.
Yeah, you'll have access to a network of other real estate agents and the MLS before anyone else can see it, you know?
Yeah.
It could
So
be
it'll
beneficial.
Likely be worthwhile
Yeah,
for everybody that wants to invest in it.
exactly. It costs a couple $1,000s, but you could do it. Anyway.
When you're spending that much money on homes, anyways,
Yes. Doesn't even matter.
pay just a little bit extra, be more informed.
Sounds like a tax write-off to me and business training. That's what it would be for me.
Do you think Skillshare you could use as tax write-offs, huh, for business training? Oh yeah,
Oh, hell yeah.
we could do so many things with learning.
Look, all
We
I'm
could get
saying,
educated.
all I'm saying is we create an LLC around the Infinity Summit Group. We can write off a bunch of shit that we do.
I actually really do want to do that.
But
And
Like the
th-
house
but
next
there's-
year.
there's no point in writing it off if there's no profits.
yeah,
So unless we like purchase, say, a home through the Infinity Summit Group and write off the cash flow from that, then we could do something like that. But other than that, there's no point in writing it off.
I guess the best thing to do now would be plan to start one at some point and just have a plan ready to go for when we do start it.
No, we could write off dinners and shit, right?
Yeah, but if we don't make any money,
What are we writing it off against? There's no profit to write it off against. So this could be an investment company. Literally.
right? Yeah.
We're just funding it and we count that as losses until we see cash flow and then we get gains, we offset the losses.
That would be
Yeah.
a legit good training for all of us. Is everyone puts in some money and we'll all look at a couple investments and then we'll choose something.
We'll talk
and
about
it'll-
this after because an idea is forming in my brain. All right. Benefit the most from the tax code thousands of pages. All right. Yeah, we're just getting a little off the topic of the taxes.
No, this is very relevant.
It is very relevant, but at the same time, I'm like, okay, all right,
Yeah.
we'll talk about it. Okay, so there's a couple different tax vehicles and tax sheltered vehicles that you can use. One of the tax sheltered vehicles I use is called a mutual whole life insurance policy. I know we've talked about them all the
of us
time.
do it now, right?
Yeah,
I'm close. I haven't got mine yet.
But you're in the process.
but have you been approved?
No.
'Kay.
I'm on my way.
All right.
Okay, you're working on it. Then.
Yeah.
Yeah, so we're all working on mutual whole life insurance policies. Any growth inside the policy is tax-free because it's after-tax dollars being thrown in there. You've got something similar called a Roth IRA. Basically, you're taxed on the money, you throw the money in there, and then you can, if it's a self-directed Roth IRA, then you can get tax-free growth on any of your investments. And a lot of it, like you are limited, but I think you can invest in like real estate, stocks, gold and silver, pretty much. But your gains on that are not taxed. But with a Roth IRA, you can't pull it out until 59 and a half without penalties. Same thing with a regular IRA, 401k, any of that. But the difference between a Roth IRA and, say, a regular IRA is that a Roth is after-tax dollars, so you won't get taxed on the growth, whereas an IRA, you'll get taxed on the growth because it's pre-tax dollars.
Do they keep up with inflation when
No.
they're actually away? So when they come out, they just get reamed.
Yeah.
Nice.
Yeah, so if you don't get one with post-tax dollars, you're probably going to hate what the outcome is because more than likely you'll be in a higher tax bracket when you're older. The reason they do the 401k and say, yeah, it's a great plan is because you put it in pre-tax while you supposedly have a higher tax bracket right now when you're younger because you're earning more, right? Like, okay, I'm putting in money while I'm earning. you get to old age and then they tax you on it, one, tax brackets are going to continue to raise. They're not going to stay where they are. Two, you're probably not going to have as many deductions when you're old. You're not going to have kids. You're not going to have,
House
head of
payments.
household. You're not going to have house payments, all this other stuff. And
It's planning for being poor.
yeah, exactly. You're planning for being poor, essentially. So
Have any of you guys
Wow.
ever looked into getting like an HSA?
HSAs are badass, and
I know.
I've heard they can work kind of like a whole life policy where you can borrow against them.
For real?
I've heard it. I
I
haven't
know.
looked into it, but
I
I'm
know.
going to.
I've probably will start one next year when we get our insurance again through the company.
Yeah.
And just start putting money in an HSA because I don't need it now, but it would be so useful later.
They're so badass. Do you know what an HSA is?
No, I'm
Anyone?
looking
Okay.
it up right now.
So HSA is a health savings account.
Okay.
It's pre-tax dollars, and you won't get taxed on them ever if you spend it on medical things.
Oh, okay.
So you can use that to pay for medical things, like co-pays, things like that, and you just throw money at it and save.
That would be a
But
great
if I-
thing
Can you
to
pull
get.
it out any time though, or do you have to wait till a certain age?
What's
That I don't know.
I don't know yet.
I think if you pull it out, I imagine there's going to be fees, and there's probably going to be
Lots of taxes.
taxes. Yeah.
Yeah.
I just think it would be a great
Don't
thing to
sound
start
that
now.
badass then.
Well,
The thing that's badass about it is you're always going to need health stuff.
yeah.
And
So
as
any
you get
health
older,
things?
you'll need more and more. So if you have this health savings account that you start now, it's like $3,000 a year.
Mhm.
That's not very much. You just stuff that for the next 10, 20 years, and all of it is pre-tax dollars. So they take that out of your check before they take taxes out.
Oh.
And it's not going to be taxed ever if you spend it on medical things. So you just
Which
pull
is-
out your card, spend it on EpiPens, spend it on any
Surgeries, dental,
medication,
anything.
surgeries, dentals, anything. Yeah.
You
That
just,
would be cool.
it'd be cool to do now. Why we don't have medical issues.
Mm-hmm.
So you get a good 5-10 years of just straight saving.
And if you can treat it like a mutual whole life policy where you can borrow money against it
Uh-huh.
at a decent rate, that would be such a great opportunity fund. Because it's pre-tax dollars, it's going to grow immense.
Another thing to look into.
That'd be sweet.
Yeah. Well, look, I'm going to write that down because that would be so nice.
Because yeah, HSAs are cool. Especially if you can keep it up 5-10 years, I mean, you'd have a ton of money in there to just any kind of medical expense paid for.
Yeah.
You don't ever have to worry about medical.
The cool thing about it is that you're not going to be taxed on the money.
Yeah.
So it's like, okay. I mean, you'll be taxed on it when you purchase the goods or whatever,
Yeah.
but you're not going to
Sales
have
tax.
income tax on that money.
Yeah.
Just gets sent to your HSA.
Would that lower your tax bracket? Because it's before they take the taxes out. So does it count as making more or less money? Or does it still the same?
No, I think you still have the same gross.
I figured.
Yeah, you still have the
Yes.
same gross income, and then they take the HSA out, and then they tax whatever's left.
Wait, so how does that work? Do you just tell the person, like your the place you work for?
They
Basically-
should when they give you insurance options. It's usually one of the options.
Okay.
Yeah, or you can just set one up. I'm sure there's all
Yeah.
sorts of insurance companies, Fidelity, whatever that has HSAs you can set up.
I'm just wondering how it gets like sent over there before it gets taxed on your paycheck.
Yeah, you'd be talking to your company, but I think you may have to sign up for one separately. I was only ever offered an HSA at A+, and I hadn't heard about them before then.
Oh, okay.
So, yeah, unless you're, do you do insurance and stuff through your company?
They don't offer anything.
Oh, okay,
Yeah.
then yeah, you'll have to do HSA probably, and yeah, everything else. Okay, let's see here. And again, I just mentioned gross income. Gross income is how much you make before taxes. Net income is what's left over after taxes. So your net income is a little more important. Gross income is going to be good for when you're trying to get loans and stuff. Then it'll make you look like you've got a really nice income. Net income is going to be what your budget takes from.
Your
Essentially.
actual money you have.
Yeah, exactly. According to this book, again, it's tax-free wealth. Then everything you do in life can potentially is potentially a taxable event / an opportunity to write off tax.
Mhm.
So if you can find out some way to, we'll say, I'm not gonna say rig your life, but like
Arrange it in such a
life
way.
hacks.
Plan
Yeah,
it out
exactly.
in a certain way.
Plan out your life. so that you can write off everything you do, then you'll be in a lot better position. Because that's I mean, for me, last year, that's about $13,000 that I could have kept, you know?
Oh, yeah.
Or whoever else. I'm sure there's way more people out there with a lot more taxes. Let's see, other 4 types of income. Okay, and then we've already talked about passive income versus active income. I guess not this podcast.
No.
So you've got passive income. That's like income you don't have to work for, technically, but you're going to be working for it. Like real estate, you purchase a house, you get cash flow. That's passive income, but you're still going to be actively searching for the investment. You're going to be actively searching for the property manager if you choose to do that. You're going to be actively making sure the property is up to date and all this jazz. So it's not necessarily 100% passive.
Most of the work's up front, and
Yeah,
then it's
yeah.
less work.
Exactly.
For passive income.
Yeah, which is the goal, is to get your passive income greater than your expenses.
Yeah.
That's when you are free.
Out of the rat race.
Yes.
Wealthy.
For those of you who have not played Cash Flow, highly recommended. It's a little bit expensive as far as board games go, but it's
Yeah, it is
worth
pricey
it.
for a board game.
$50 or something.
It was like 80, I thought.
80.
We'll find
Here
this
I
out.
was thinking it was over $100, guys. What's happening?
It's worth it. It's fun, and you learn a lot.
Yeah, and it's good to go through it as if you are an investor. Like, don't just play it like you play Monopoly or whatever. But even with Monopoly, you can go through, actively play it, and talk about it where you're like thinking about each move strategically, tax wise, all this jazz.
$80. I was right.
$80.
$70 on Amazon.
Oh snap!
Weird flex, but okay.
80. I'm looking at it right now. Whatever. It's
70.
pricey.
There's Cash Flow 101. There's Cash Flow 202.
Oh, this one's 101. Is 202 like the newer version?
This is just
I
the
think
sponsored
202
one.
is more in depth. We need to get that one.
Okay. I don't think I played that one.
I haven't.
Another thing to add to the list.
Yes.
You can buy that for the group. Play that one of these times.
Yeah, it'd be fun to play Cash Flow. All right. Let's see, we already got real estate deductions, no taxable income, real estate legal entity structure. Oh yeah, so he was talking about how if you own real estate, you get the deductions, or something similar. You get deductions because the government wants you to own real estate and rent it out to create housing, right? But he was saying, and this is Tom Wheelwright, saying that if you put real estate inside of an LLC, then it helps you write off those taxes even more, or like reduce the taxes even more. It didn't make a whole lot of sense to me. Definitely have to look into it more. But there is one thing that he did say, is that if you put LLCs, like if you put tax shelters inside of tax shelters, it cancels out the sheltering.
Yeah, it doesn't work very well.
Yeah.
Yeah, so it's kind of asset protection inside of asset protection may or may not work very well.
I thought asset and protection side of asset protection was fine, but tax havens inside of asset protection didn't work great.
Tax
Like
haven inside of a tax haven?
Yeah,
So
that's
like
what
an
it was.
LLC owned by an LLC?
Something like that, or
Okay.
I'm lost because I
Can you
swear
do
he
that?
says to do that. We'll put an LLC inside of a corporation inside of a trust.
Yeah, he did do that. He
Yeah.
did say that, but he wasn't. But what he was saying was just for taxes, I think.
Right.
So you might get asset protection. I was confused on that. Like, is he saying I don't get asset protection or what? So you'll get asset protection, but you won't get tax. You
That
won't
makes
get
sense.
extra tax write-offs, kind of thing. He was saying it was like bad. They might cancel each other out, kind of thing. So, yeah.
All right, that makes sense.
Anyway. All right. One of the good quotes in the book says that anyone, actually I think this is straight from the tax law. Anyone may so arrange his affairs so that his taxes shall be as low as possible. He is not bound to choose that pattern which will best pay the treasury. There is not even a patriotic duty to increase one's taxes.
I want to say that was a quote by the founding fathers.
Yeah, I don't think that's from the tax code, because they wouldn't say don't pay us.
Yeah, no.
Did you need to write that down?
Huh? I just wanted to know who it was from.
Okay. One idea that I thought was really interesting in there was he was really pushing that paying your taxes is not patriotic, because he's had people at different seminars and stuff say, paying taxes is patriotic. I'm helping the government, America. And I don't know if he was in America, but that's kind of what they were saying.
Yep.
And he said, no, it's more patriotic to not pay your taxes because most of the tax code is written to incentivize. Thank you, not paying taxes. It just incentivizes certain things.
It's by the judge Leonard Hand.
When was he a judge?
Let's see. I don't know. Oh, old. It's an old picture.
Perfect.
Hmm.
All right, here it is. Here's the percentage I was looking for. 99.5% of tax law is written to reduce your taxes. That's from Tom Wheelwright. So 0.5% is written to actually take your taxes.
Yeah.
Yeah.
But
That's
it
insane.
seems weird because they keep trying to push laws that take more taxes.
Yeah.
Right, and that could still be part of that 0.5 tax code. They just amend the numbers.
Yeah.
You know?
Yeah.
That is crazy though, because we're all taught it's either taxes or death. Like,
Yeah.
Yeah, there's only two
constant-
things constant in this life, death and taxes.
yeah,
Which is still true, even if you can evade taxes. As
Yeah,
much as
taxes are still
possible,
there.
You're still gonna get taxed.
My thing throughout all this was like, okay, we're figuring out all these ways to avoid paying taxes. We're being patriotic, doing it, and everything. Why the hell do we got to pay them to avoid them in the first place?
That's what I'm saying.
1948
It's ridiculous.
Okay, thank you.
to 1951. He is the most quoted lower court out of any U.S. judge.
Shit. And his name again?
Leonard Hand.
Awesome. Thank you.
It just seems weird that they throw a bunch of taxes on you and then say, okay, well now we're gonna make a bunch of tax code to incentivize you to not pay the taxes.
Well, because
But
then they
what?
can choose what gets built and not.
It's
There's
a
a-
form of economic control.
Yeah.
I don't know why, but it's messed up.
Because as a group, as the government of the United States, they are trying to build the U.S. as best they can. And so they want to incentivize jobs, they want to incentivize housing, and they want to incentivize oil and gas.
Mm-hmm.
Those are the major ones.
And food. and
taxes
stuff.
are
Yeah,
theoretically a
food,
good idea.
agriculture.
Like, they help build infrastructure, all that stuff. But they
The
do
theory
it
is
in a
good, yeah.
bad way.
Just inefficient. The way government does things. That's the way.
Yeah.
Well, we're
It's
actually just
inefficient.
providing for other countries.
Mm-hmm.
That's
Yes.
We're not even paying for America at this point.
That's the problem. I mean, I had to fax documents to someone because they didn't have an email. It was a government facility
For real?
for flying, dude. They're like, yeah, we need all this faxed to us because we don't have an email. Well,
What
the
the hell?
fuck? Okay.
You don't have a phone?
I called them. I was like, I was on the phone with them. They're like, yeah, you have to fax it to this number and then you have to call us back. Like,
That's
what the hell?
But why?
So I had to go to a special facility, fax documents over, go back, call him another day. And this is after I was trying to get a hold of him for just days on end. But anyway, we don't have to talk about that. Capitalism does it better than
Yes,
government.
sir.
Facts.
What was I going to say? Yes, this one. The only difference between death and taxes is that death doesn't get worse every time Congress meets. Will Rogers. Beautiful, beautiful.
Truth hurts.
So here are some of the possible deductions you can have as a business owner. So you've got your mortgage interest and deductions. Let's clarify this. A deduction just reduces the amount that you can be taxed. So it reduces the amount your profits can be taxed essentially. And then a credit is like directly goes dollar for dollar against income. Any income. How can I better explain this? Well, yeah.
You did it pretty good.
Yeah.
It's just
Look it
confusing.
up if it's confusing, because all taxes are confusing. So here are some deductions you can have as a business owner. Mortgage interest, property taxes, charitable donations, business supplies, business equipment, marketing expenses for your business, home office business expenses, vehicle used for business, meals and entertainment for discussing business, and travel. And then you can also write these off when you have rental real estate, closing costs, property management fees, leasing fees, maintenance and repair expenses, supplies for the property, and depreciation. And then you can also, in that depreciation, like I said, you can itemize out your
Cabinets,
cabinets, all
furniture,
this. Yeah,
faucets and stuff.
exactly. Let's see. Other than that, boys, what we got for them?
I think that was a very in-depth covering of this book.
Yeah,
I
there was a
agree.
lot of focus on real estate.
Likely because that's what Rich Dad does, right? Rich Dad, Robert Kiyosaki, and it's kind
Yeah.
of his advisors.
Yeah, so what he said at the beginning of the book was that Robert approached him and said, "Hey, I want you to write a book on the tax law, but I want it to be able to be worldwide," which is another reason why he had to go very vague, is because tax law varies from country to country.
Mm-hmm.
But there's overarching themes that are in and through every country. One of the last things I wanted to talk about is that gold and silver capital gains, long-term or not, are like 28%.
Tax 28%.
Yes, your gains. So most things like your stocks and stuff, if you hold them for more than 1 year, it's 15%. That's called long-term capital gains. Gold and silver don't have long-term capital gains.
How do they know if you have silver?
Exactly.
You report it.
Exactly. How do they know if
Honor
you have
system.
gold and silver? How do they know if and when you bought it? All this stuff. Yeah, there's a gray area.
Maybe we've got
But
family
just-
that's worried about that kind of stuff, so they only buy gold and silver in cash.
Yeah,
So they don't want nobody knowing they
which
got
is
it.
understandable. But if you
Yeah.
bought it 10 years ago, how are you even going to know how much you bought it for?
Yeah.
You don't.
Or what you bought it with, or if you're even going to have the same card or whatever. It's just,
It doesn't
Yeah,
matter if
it's
they
a
make
gray
it illegal
area.
too. Like
Yeah.
they've done in the past. There's literally no reason to be
Unless
worried
they
about
come
it.
start searching homes. But then,
Okay.
yeah, then it'd be bad anyways.
they can
Yeah,
Wouldn't
search.
be really worried about your gold and
Suddenly,
silver.
all my silver will be in the walls. Just
buried in the backyard.
Yep, exactly. Did you get some new grass in over here? Nope.
Just been watering that one real well.
Yeah, and you can't look under there either. But anyways, I just found that was very interesting that gold and silver are taxed very highly on any gains,
That is interesting.
and I halfway wonder if that came from when the Lehman Brothers went and ran it up in the 70s, but I don't know, because that's around when it was made illegal and things like that, like illegal to own, and we were taking off the gold standard. But
Did
yeah,
you see
anyway.
that there was a company just recently that bought $50 million in gold and in
Yeah.
100-ounce bars? It was a company that manages data for like millions of companies. Just like
What the hell was it called? I know exactly what you're talking about.
That's
yeah,
cool.
Tim Pool talk, but it was like the company that like CIA and all that shit uses, because they manage everybody's information. And they makes you wonder, why are they buying gold? They're buying it in case of a black swan event, they said, which is an event that no one saw coming.
COVID. Except
Well,
a
they
lot
just
of people
recently
saw it
bought it.
coming, just not me.
Well, a black swan event was kind of cool the way they explained it. Like, if someone notices a black swan event, it's no longer a black swan event.
Yeah.
Kind of weird. Like one of the planes that was going to get hijacked for 9/11, like someone stopped one of the dudes and it was just like whatever.
Yeah.
And so you never hear about it because nothing happened, but if you wouldn't have, it would have been the black swan event just because somebody
Yeah,
noticed.
it's like 9/11 was a black swan event and crashed the markets.
Yeah. And they were buying gold because they're nervous about something
Yeah.
to hedge against a black swan event.
Very interesting that.
Yes.
I can't find
Black
this.
swan event called a major market correction come end of this year, beginning of next. Yeah.
Yeah.
You heard it first here, folks.
Is that a black swan?
And if
event?
I was wrong, I was wrong.
Yes, if no one does anything.
Yeah, if it corrects another 30% out of nowhere, like it did, or this COVID variant 2 suddenly gets intense, everyone locks down again.
When they
Bam.
start mandating vaccines really bad, and every state or every company starts doing it, and all of a sudden employees just stop working because they're not
Yep.
getting the vaccine.
Yep.
Dude, I went to
guaranteed
Smith's today,
If
and it says if you don't have the vaccine, you have to wear a mask.
And it said if
No,
you're
opening a
vaccinated,
store.
it's still recommend it.
Yeah, it's
Mhm.
like,
All of them say that.
lots
It's
of companies,
insane.
like in
Da-da-da-da.
New York, you can't go into restaurants without your
they're,
vaccine
they're
card.
starting to cut your power too.
Mm-hmm.
Excuse me, what?
Wait,
Yeah,
They'll
what?
cut your
Even-
power.
The fuck?
Tim Pool did.
Okay,
some
hold
calling
on, hold
over
on.
Yeah,
Let's
this-
finish out this tax podcast, and then we talk about this after.
All right.
Good lord.
It's bad over there.
Yeah. Anyways, so taxes are not there to hurt you. They're there to help you. Make sure you keep very good records for any audits or anything, and you should be all set to go. Anything else you guys need to add? Don't forget, it is called Tax-Free Wealth by Tom Wheelwright, and it is in the Rich Dad Advisor series.
What book
I'll
are we
add
reading
that
next?
below.
Yes, and then in 2 weeks we are reading the book on flipping houses by Jay Scott. It's by the Bigger Pockets podcast series.
It's literally called the book on flipping houses.
The book on flipping houses,
Yeah.
yes.
Yeah.
That's exactly what it's called. So we'll be talking about that in 2 weeks' time. Next week we'll be talking about good places to secure your wealth offshore and how to potentially do that legally.
Yep.
Nice.
So it should be an interesting one. But make sure to like, share, subscribe, hit that notification button. Make sure to check out our merch at www.infinitysummitgroup.com. Check out our Instagram, social media, TikTok, all that jazz. And we do have those coins still. We are working on getting the envelopes still. It's been a nightmare and a half. But we'll let you guys know when we got all that, and you'll see it blasted everywhere. So,
And comment, give us feedback.
yes.
Anything you want to hear about? Anything we could do better?
Yes, we want to know, good or bad, everything. So thanks again, you guys, for listening. We'll see you next week.
Peace
Goodbye.
Bye.